Hey, what's up, my friend? So welcome back to this month's market analysis. If this is the first time you're watching this video, right, where you see, me talking to this webcam and there's a chart in front of you, this is a monthly video that I do and I share my top process of the markets. It's not really educational content like my other YouTube videos. This is a monthly video where I share with you my trading top process of markets I'm trading, why I'm looking to enter, what is the trade setup, my winners, my losers, etc. So a lot of times, right, many traders just think that I post out educational content, cherry pick charts, right, hindsight trading, but I have this type of, monthly videos that they are not aware of, right? So if you're watching this, right, you're probably one of the few percentage of traders who are aware of this. And if you're aware of this, right, say got it in the comments section below. Just say got it, right? And I know you're one of the insiders. So to kick things off, let's have a look at a trade that I took, and it's not looking too pretty for me. And I want to share with you the thought process behind it and why I took the trade. So I am looking at New Zealand dollar, this one over here, and this market is actually in a downtrend. You can see a series of, lower highs and lower lows, right? This lower high, then lower low, lower low. And on top of it, I classify this as a strong downtrend because if you pull out the 20 MA, you notice the price is below it. It tested once over here, twice, and the third time over here. So the third time is where it caught my interest, where I was looking for a sell opportunity because for starters, number one, we are in a downtrend. Number two, we are at this area of value, which is the 20 MA. And number three, we are at this a previous swing low that could become support. So the entry trigger that I got was on the 4-hour time frame. And for those of you who have been following my work now, you are probably familiar with the technique that I call the break of structure. So you can see that prior on this pullback over here, right, you have a series of higher lows and higher high. And at this point, right, let me just highlight to you the point that I'm looking at. At this point, okay, this swing low over here, or support if you want to call it, if the price breaks below these lows, at this point, the price would have created a lower high and lower low. And this is what I call a break of structure. So there are a few things coming my way now. Number one, the daily time frame is in a downtrend. Number two, the daily is at an area of value at the 20 MA plus the previous swing low that could become resistance. And number three, we have a break of structure here on the 4-hour time frame, signaling that the sellers are in control and the price could head lower. So I went short. My stop loss is 1 ATR above this high, somewhere about here. Okay, my stop loss. And entry trigger is somewhere here. So the market, it did went in my favor a little bit before it started reversing now against me. So my stop loss is in place. I'm going to respect my stop loss. If it hits my stop loss, I'm out of the trade. And clearly, I'm wrong on this trade. So I'm wrong many times, right? I'm not afraid to share. This is my thought process for New Zealand dollar. And yeah, let's see how this one plays out. That's the one thing that I want to share with you. Moving on, I also want to share with you a very interesting setup on a market that many people has been bearish on, right? If you look at oil, okay, the weekly time frame, you see that oil has collapsed, right? I'm just going to zoom out this chart to a maximum. Okay, so based on trading view, based on the data feed from Oenda, oil, right, the last time it hit the lows of $25 is sometime back in 2003. So fast forward almost 17 years later, right? Price has now, oil has hit $20 a barrel. Multi-year lows definitely. And what's interesting is that on the weekly time frame, you have a massive false breakdown. So if you just zoom out again, you can see that price retested this significant lows, the multi-year lows over here, as well as the lows that you can't see, which is further back on the left, and then it reversed back and closed back above this area of support. So this is a sign of strength. Okay, and on top of it, right, it's at multi-year low levels. Now the question is, is this a good time to buy? Well, I don't trade off the weekly time frame, but if let's say I do trade off the weekly time frame, right, I have no issues, right, wanting to trade this false breakdown. I'll be looking to place a buy stop order above this highs, and stop loss, so I can just go 1 ATR below this lows. And if you're to do it, you can see that your stop loss is going to be pretty wide. It's like going to be like $13 or so, right, on oil. So instead, what I'm looking to do instead is to use again, right, the break of structure technique, which I have shared with you earlier. Again, you can see that this concept, this principle, right, is pretty much universal. So now this is the weekly time frame, the higher time frame. Now let's go down to the 8-hour time frame and look for a break of structure. So at this point in time, right, you can observe that this market structure, it has formed a potentially higher low over here. Now, has it formed a higher high? Well, not quite, right? Only if the price breaks above this highs, then we can see that there is a higher low and a higher high, and we can see that buyers are potentially, they are in control and the price could head up higher. Okay, so what I'm looking for is, again, for the 20 MA to serve as a guideline, right? I want this 20 MA, this red line over here, to touch the lows of the build up, to touch the lows of this level. Because when that happens, right, it would give me, right, build up that's being formed over here. So when that happens, right, for that to happen, right, there would have to be, a few more consolidation candles over here. Okay, and that kind of act as a new price structure that I can lean against to set my stop loss. And this is also another sign of strength, because it's telling me that buyers, they're willing to buy at these higher prices. Buyers are willing to buy at this area of resistance. So I'm giving it a few more candles to form, possibly 3 to 5 more candles. Let the 20 MA slowly slope up and touch the lows of the build up, possibly somewhere here. When that happens, right, I'll be looking to buy oil. Stop loss, the entry, right, will be a buy stop order above this highs. So if the price breaks above that highs, I'll be looking to buy. Stop loss, right, will be just 1 ATR below the low of the build up. So let's say this is the low of the build up. Okay, let's say the market consolidate, right, and this point is the low of the build up. I will set my stop loss 1 ATR below it, possibly somewhere here. Okay, then I'll be looking to buy if the price can break above this highs. Okay, and to see whether, a new bullish trend could emerge, and I will look to trail my stop loss accordingly. So oil is definitely a market that is worth looking. It has collapsed a lot in recent times. Many people are not looking at this, right? They are looking at stock markets and whatnot, but oil, definitely something, interesting is brewing in this market. Okay, and not only oil, right? I want to bring you somewhere towards the bond markets, right? If you look at the 5-year Treasury note futures, you can see that this market also, right, near the highs. If you just pull out the 20 MA, you can see that this market is pretty much in a strong uptrend. The price has been, hovering, right, steady above this 20 MA for quite a while. Tested once, twice, thrice, and right now possibly coming back for another bounce at this minor low over here. So again, right, the plan to trade this is a couple of ways. Number one, what you can do is you can trade the false break on the lower time frame. Let's say you go down to the 4-hour or the 8-hour time frame. You can see that there's this lows over here. The market could come down lower, and then make a sudden reversal up higher, closing back above this area of support. So this reversal, right, is something that you've seen earlier on oil, right? A very strong, big, bullish engulfing pattern on the weekly time frame. Okay, let me just bring up the oil market so you can see how strong that price rejection is. So on the weekly, you can see, okay, very strong price rejection. So this is the type of rejection that I want to see on the 5-year bond 4-hour time frame, right? Since I'm trading off the 4-hour time frame, I can trade off this price rejection because my stops will not be so wide. Okay, so let's say the market does come into this area of support, reverse up higher, close back above support, I'll be looking to buy. Stop loss 1 ATR below this lows. Possible targets, right, is at this area of resistance here, and then holding possibly a small portion, maybe half of my position, right, to see if the price can break above this area of resistance. So this is a couple of trade management techniques that you can use, right, should the price break out of resistance and you still want to capture, a piece of the move, right, and get some kaching out of it. Okay, so this one is the 5-year Treasury note futures. And finally, right, just to share with you one last thing. Okay, so this is a trading setup that is a little bit more of a counter trend trade. Okay, so this is dollar Mexican, right? You can see that this market pretty much went parabolic, right? This whole range of candles over here, right, just day after day, breaking out new highs. Okay, and you can see that we had a pullback, a pretty strong pullback. This 3-candle pullback, and then the market retest the highs again, right, but failed on this candle. Notice that this candle is what I call a false breakout, where the price broke above the highs. You can imagine traders, when they see that the price break above this highs, they go long, right, thinking, oh, the market is in a breakout, right, this is bullish, let me go long, trend is strong, right, let's see how that goes. The next thing you know, the same candle just reversed and closed near the lows, and now they are in pain. So no doubt I agree that the trend is still towards the upside, but there is opportunity, right, for a swing trade short, right, towards the downside. What I'm looking for again is a very simple technique called the break of structure. Let me share with you how that could possibly unfold. So again, market has now made a pullback. So what I'm looking for is a wick pullback up higher, right? Maybe a small range candles, 3 to 5 candles making a pullback here. Okay, when the price couldn't pull back further, I'm looking to sell the breakdown of this low. So if the market fails to retest the highs, the pullback is starting to show again. The sellers are starting to come in, right? It's going to break below this swing low. And when it does, you now have a lower high and lower low. And I'll be looking to take a short position, right? Possible targets is at this area of support over here that you've seen earlier on a higher time frame where it's a swing low. So that's a significant level. I'm not looking for any aggressive targets here because, as you've seen, right, on the higher time frame, it's in an uptrend, right? So don't want to get too greedy with such a counter trend trades, right? I'm trading against the trend. So having conservative targets, right, would suit me perfectly. Okay, so that's the final one that I want to share with you is the dollar against the Mexican, another potential short trade towards the downside. And now at this point in time, right, if you like to learn more about such trading, price action trading without indicators, mainly with just a naked chart, okay, what's happening is that right now enrollment for my premium training program called the Ultimate Price Action Trader is now open. Okay, I'll leave the details below. You can check it out, right? I think enrollment is going to close this weekend, so if you're interested to learn more about the way I analyze, the way I trade the markets, I'll put the link below. You can click on it and learn more and see whether it's a good fit for you. So with that said, I wish you good luck and good trading, trade safe, and I will talk to you soon.